All right, good morning once again, everybody. Thank you for being here on our trading journey. Today is a Friday. It is the last day of July 2026. We'll never see this day again in our life. It will be history, so make the best of it. All right, before we begin officially, the NFA Compliance Rule 2-29C disclaimer must be discussed or at least shown. Note that past performance is not indicative of future results. Trade with money you can afford to lose. Should be speculative in nature only. Not with monies that you need to pay your rent or your mortgage or your insurances or anything else, or your food. Can't forget food. All right, very good. So let's take a quick look backwards for a moment. It is Friday. I like to look backwards and then forwards. Yeah, alimony, you got to put some money aside for your alimony payments as well. All right. Okay. What I've done here is I've taken a look back in history a little bit. Taking a look on the left-hand side chart, that is a weekly chart. So, again, the reason why I look at these weeklies and dailies and so forth is most of the time, most of our attention is centered around the intraday period, rightly so. But it is good to take a look at, the larger picture and to get some perspective. So here on a weekly, even though we don't trade a weekly, what we want to do with a weekly is we want to note, what are the weekly levels? What is a weekly high low? Let me zoom in a little bit here. What is a weekly high low? What would the bulls need to do to kind of round out the week? Okay, what type of a week has it been? Those type of questions. All right. Currently, at the moment, the week is a doji, right? That Japanese doji, right? So wide range, clearly. Right now, where price is currently right around the opening of the week. But clearly, this week was a wild week, at least since Wednesday. But it's been a week, W-E-A-K, week, right? Though the market did rebound, most of the activity was to the down, and then we got that snapback. All right. But again, taking a look at the current high low, well, though the low broke, a number of lows. This was really the key low down here near the 7300s. That never broke, and then went to snap back. So, what would the bulls now need to do? What would they love to be able to do today? Certainly could do it, right? Get above last week's high. That would be pretty darn good if they can really rip it, past the 7560s. Again, it's possible, right? I mean, look at the ranges we've been having the past 3 days. 3-day average range, right, was 137 points. Yesterday's range, 167 points. Getting past above 7560, child's play. So bulls would love to do that. Again, this is not a prediction. Just trying to get back. What they want to do is turn this week into a reversal week that took out the prior week's high, not just back into the prior week's range, but really take out the prior week's high. That would be a strong vote of confidence. Now, again, you've probably read, some of the, recent underpinnings of potentially why the market was weak. Not necessarily all because of the Fed's commentaries, more likely as a result of that hedge fund, right? The AI hedge fund that had to sell to Citadel. If you take a look at all those names that were part of that liquidation process, most of them are up double digits in percentages yesterday. So, once it was announced that Citadel had, that transaction was complete, the market kind of felt, think about it, kind of felt a sense of relief, right? That there's more likely no more selling, liquidated selling, margin selling that occurred. And then what does that happen? What happens when that occurs, right? Market feels sense of relief. Well, let me go buy it. The selling pressure is gone. Okay, so these are some of the underpinnings that the market, has gone through many times in the past. All right, and guess what? It will continue to do that many times into the future. Right. So again, you can use that as a reason that the market was down strongly, and then the rebound, whatever you want, is fine with me. Again, in terms of what we do and how we look at things, okay, that may be the backdrop. For us, it's always going to be staying with price action, the dominant force. And then we find out answers or reasons or potential reasons later. But in the heat, in the moment, in the current action, there's no reason to try to figure out what's happening. Just go with it. Don't look for those reasons. You can always find out reasons later on, but by that time, opportunities have come and gone, right? So keep that in mind. Anyways, that would be a bullish move if the market were to, close above that. Looking closer now into the daily. And again, this is something that I've been saying, right? If you were to, and again, we don't really do that, but if you were to, kind of X out some of the, recent craziness, but basically the market is still in a range, is it not? Did it break the lows, structural lows? No. Okay. Right. Yeah, it went below this low, but again, this is the key low over here, 7300s, right? So again, very much nothing more. When you look at this, it's nothing more than a what? All right, buy the F and dip, right, to the prior pivot zone, prior support pivot zone. Okay, so down and then back up. There you go. And now, if you take a look, and again on the daily, if we kind of remember, we do the high low, midpoint area. We're basically back to around the midpoint of the most recent daily range, right? So if we start connecting these high lows that we've talked about in the past and using the midpoint, where is price? Now, okay, again, this is a daily, so we're just using it as references, all right? We're not using it as a decision model intraday. You can drill it down to the 60-minute, you're going to see something, a little bit different. We're gonna start zoning in on, excuse me, that's the 240. So 60-minute, you'll be starting zoning in on, the landscape where we tend to, be most of the time, right? And again, on this particular chart, I've outlined some zones from probably weeks back. And again, this zone over here obviously, became a nice little area. So now we're back up here again, basically the mid of the entire zone. Okay, and then so what would the bulls need to do now, right? Again, first and foremost, you got to clear that pivot, and then this becomes kind of the objective, right? This would be the weekly, right? Get above the weekly high, prior weekly high. So that's that would be some of the bullish objectives, uh, for today, being the end of the month. As anyways, um, yeah, of course, anything goes. But I'm just kind of outlining what would the bulls, be potentially looking to do, the bears, etc. All right. Yeah. In all cases, we're going to look for, we do trade our plan as we see it. Just stick to the trade plan. All I'm doing here is just outlining some of the broader um, areas, because again, we're looking to always follow, the elephants, right? And so if we can stay in alignment with them, that's the great thing. So, all right. And again, you can read the daily trade strategy. The initial targets to the upside have been fulfilled, etc. I did post a question up there if you didn't see it, and if you could post some answers, that would be great. What is the most satisfying part of a trade? The most satisfying part of a trade. Okay. There. All right. So let's just kind of throw those out there. We'll kind of look at them as the morning progresses. But what is the most satisfying part of the trade for you? And I would assume there's going to be varied answers. Lunch. I like that one. I like that one. What's the most satisfying part of a trade? Lunch. Not trade day, a trade. As you consider trades, what is the most satisfying part of the trade? All right. Yeah. All right. So I won't, I'll let you kind of sit on that, throw some answers out there. All right. As we get started here. The most satisfying part of a trade. So when you review your trades, okay. So the prior high here is 98. So again, bulls have already penetrated up through that, but we'll see if the bulls can maintain, get some acceptance, okay, above the prior high. All right. So remember the concept of acceptance or rejection. If in this case the bulls are, they have some control here. You want to see if prices can be accepted above certain levels. Can they be accepted for a period of time and volume? That becomes important. All right, and away we go. Okay, early push here. You get an A10. All right, so again, looking to stay above the prior high here. Let's see if they can do that. Find some acceptance. Again, all the averages are pointing in that direction. So we'll keep the flow positive. Go with the flow. Yep, 2025 area is kind of a key area as well. Yep. One of our targets is up there at the 20s. Right, you got the D level up there at the 20s on deck. All right, didn't get anything off of that 810. Boy, that's been sketchy though, right? Again, if you guys are staying in alignment, right? If your primary thing is I'm just going to stay in alignment, again, there's no shorting when you got EMAs, pressing like this. All right, there's again, create that rule for yourself, right? If there's an if those EMAs, right, are moving the way they are, there's just no freaking shorting. I don't give a shit one way or the other, you know. All right, boom, 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 bang, 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 hey, boo, boo, smarter than the average there. Rock and roll, hoochie coo. Rock and roll, hoochie coo. The fish are biting. Rock and roll, hoochie coo. Lordy mama, light my fuse. And that's what the market is doing, rocking and rolling, hooching and cooing. Light my fuse. Rick Derringer. Yes, sir. Rick Derringer for sure. All right. All right. So there are the 15s. Dr. Dean, did you ever travel up to Mr. C's? That was a hot spot in my teenage years. Probably a little bit of a trek from Shrewsbury. But I saw Rick Derringer there live. Mr. C's in Lowell, Mass. Did you ever travel up there? I saw Rick Derringer up there in my teenage years. That was the hot spot for bands back then in my area. Oh, okay. You grew up in New Jersey. Okay. That would have been a trek. That would have been some travel. Okay. Yeah, I saw Rick Derringer live in my teenage years. He was an influence of mine, actually. Talk about influencers, right? Yeah, yeah. He went around the various clubs in the Northeast and probably other sections of the country as too. Yeah, I heard his guitar recently sold for some like outrageous price or something. I don't know. It had been lost. He found it. I guess they recovered it, and then I don't know. It was sold for some ridiculous number from a collector. All right, so move up, push down. All right, again, look for that volatility move, right? So, guys, here's a simple. I'm going to give you guys a simple rule, just a general rule. It could be you can be make it as specific as possible if you want. Okay, and modify it if you want. Just a simple kind of guideline. You want to call it a rule, call it a rule, but simple guideline, right? Is again, we use moving averages, right? And again, it's probably one of the oldest tools to use, but it's not so much the tool itself, it's how you relate to the tool. Okay, so real quick, all right, I don't want to spend 3 hours on this, but again, price is the most volatile piece of data that we have, right? Would everybody agree? Raise your hands. The price itself is the most volatile. Each bar is going to snap up and down, snap up and down. So when we're using, particularly if we're using a tick chart, right? Any single tick chart, any single tick bar that is meaningless. Okay. Each single bar is meaningless because the volatility, these things, 750 trades. I mean, whatever size trades they are, right? it's not an individual bar. It's not like looking at a 5 minute or 10 minute, 15 minute bar, which again, there's time and some a little bit more significance in there. So what do we do? Since that is the most volatile piece, okay, by using the EMAs, all right, that smooths out the volatility. Right? That's the main core of using EMAs. It's to smooth out the action. Okay? Very simple. Everybody should know that. So one of the rules is, all right, the buy rule would be price, right, greater than a rising, and I'm going to use up arrow for rising, right, EMA. Okay, so I'm only looking for buys, or buy lean if you want to, use that, right? I'm only looking for buys when the price is greater than a rising EMA. And on the sell, very simple, it's going to be the opposite, right? Price is less than a declining, okay, EMA. So what does that mean? When the EMA shift right here, right, you can see price is above it, and that EMA is rising, that is a buy. And you stay leaning to the buy until there's a shift, right? You got the shift over here, right? So now prices are below a declining EMA. Does everybody see that clearly? That's one of the core rules that I've stayed with my entire life, right? And again, particularly when that EMA has a very steep slope to it, right? So buying, if it's below a declining EMA, and again, this is a 13 EMA here, right? Actually, this is a Heikin-Ashi EMA. Everybody knows what Heikin-Ashis are, right? This is a Heikin-Ashi EMA, right? So on Sierra chart. It's just a Japanese style chart. That's all. It's a Heikin-Ashi. But it's a 13 EMA. All right, that's all it is. It's a 13 EMA. Make no more of that. Same concept. So when price climbs above an EMA and that EMA is rising, all you want to be thinking about is buying that price, right? And then when it shifts, as it shifted here, okay, and the price starts declining below a declining EMA, I'm only interested in selling, no buying, no long, no new longs, right? If you were to keep that little simple guideline rule, and I've had that forever, right? Then when you look at price, all the, the snappiness in price, back and forth, back and forth, back and forth. All I'm saying is, where is price relative to that EMA? If it's below that EMA and that EMA is declining, I'm only interested in selling. So if price bounces above that EMA and that EMA slope is declining, what is that? It's a premium. I want to sell that. Make sense? Simple rule, doesn't have to be complicated, right? Take that to the bank, as Beretta would say, right? And I'm telling you, a simple rule like that, all right? Remember, levels are just levels. They're static levels. You need to see levels respond. The price action being as dynamic as it is. And again, I'm more interested in more of the smoothness of the price, because I don't select any individual bar on a price on a tick chart any more significant than another one. What I'm interested in is if those prices get above, or if they're riding below, or if it gets above a declining EMA, again, that becomes premium conditions, etc. On the long side, same thing. So it's just something to keep in mind. That, I believe, in my heart of hearts, is going to keep you uh, 90 some odd percent of the time, if not most all the percent of the time, on the correct side of price action. And you don't have to, you know, you don't have to like worry about whether or not you're staying in alignment. You are in alignment. So something to think about. Okay, so nice quick reversal. That doesn't mean you can't take a trade at a level like a D level, one of those extension levels, etc. No question that you can certainly do that, right? But when prices reach those levels, so here's the thing: prices reached, it actually came up to the penetration level, 15s near to the 20s, right, on a retest. So here's a level, okay, of interest. Okay, do you have to sell at that level right there? You could, but do you have to? Is it imperative? Is it mandatory? No, it's a level. What I like to do is I that level there. Then when I see this, right, which is a shift, right? So price is below, right, declining EMA, right? So that's the 13 EMA. Okay, so prices start below that. Boom. Yeah, and there's a BLT, exactly. There's also a BLT there. But again, I'm just referring to the, where price is relative to the EMA. Okay? And so when so if you're at a level and the thing begins to shift like that, just go with that shift. But you get it, sometimes you got to be quick. You got to be looking for it, right? Most trades that we do have to be kind of planned out in advance. I'm going to do this if. I'm going to do that if. All right? So think about that. Review it over the weekend. Play around with that. Again, and I like to write things, in shorthand, right? So if price greater than a rising, so an up arrow, EMA, in this case, I'll parenthesize it and say 13. It could be anything, 1334.89, right? Equals a buy. Okay, and price less than a declining EMA. Okay, again, could be 13, 34, 89, or whatever you want, right? Equals a sell. And again, I'm going to put condition. Okay, that's a core formula that I've used since forever, since the beginning of time, and it has kept me, out of harm's way in a big way. Remember, when I was a market maker, I didn't use any of these rules. I didn't have any of these rules. All right, I was a market maker. I was the ultimate fade trader, buying them on the way down, selling them on the way up. But that was the function of what the job that I had at the time, right? Making an active market. I don't have to do that today. Screw that, right? I don't have the money line for that, and that's not what we do. So think about that, right? Just create some rules for yourself. It's a simple rule, and it can really help keep you, out of trouble. And then work it with. And again, a lot of times this is, generally when we're looking for changes from key levels. Now that the market is, come down here, you could say, well, isn't price above a 13 EMA? Yes. But again, what about the other EMAs? They're still down. What's the lean? All right. So again, you got to be judicious on how you use that rule or that guideline. So again, work it in for yourself, work it into a plan, and see what you come up with. All right. So again, it is a cycle 2 today. We're looking for rotational movement. We got another test to the upside and a failure. So again, failure reversal. We're in the down leg. And now what's the current lean for us? The down lean. Back to the prior close. And that's all that we need to know. Down lean, and we'll just stay in alignment with that. Easy peasy, right? Don't make it difficult. All right, very good. All right, so we are staying to the sell side lean until further notice. Yeah, you Michigan at 10. If you're looking for a forecast or some, right, there's your you Michigan expectation for those that, if it matters to you. If it matters to you. CL stuck in the mud, yeah. Stuck in the sludge. Stuck in the sludge. All right, so market needs to find its footing, right? Where we're going to get two-sided trade. Again, right down near to the close, usually a level that, uh, again, get some sort of a response from, right? Yeah, fill the gap. All right, we're still kind of in a negative gamma environment. So again, what that means is the market, price action can, um, you know, think about, kind of acceleration in both, potentially in both directions, whichever. But right now we get the down direction. So a negative gamma environment. Think about just increased volatility. Lots of good movement. All right.
Yes,
All right. So we get some heavy activity right around here. Woohoo!
triple
62, 63 was an area marked off yesterday on my chart. I don't know why, but I guess I did. There was something there, right? So potential buy response somewhere around the 60, 65 area. 60, 65. Just kind of throw it out there. 60, 65. Again, I have a notation around that area. So
cycle.
What's the difference here today? What do we got? We got so basically 30.
PTBULL
Yeah, yeah, just missed the up there at the D level near the 20s, sure. Yeah. All right, I guess this area that I marked up yesterday, not home, nobody's home, nobody cares. Nobody knows, nobody cares. All right. Wow, nice little 200 extreme. I'm working on that, by the way. Nobody knows. Well, we expected volatility, no? Yes. Again, we're in a negative gamma environment, so that just simply means that the price directions, right, can accelerate momentum. Dealers have to hedge, so as customers are buying puts and selling calls, that puts pressure on price. That gets dealers long. What do the dealers have to do? They have to sell. That's a negative gamma environment. And that's what we're in right now. Which means the direction can accelerate pretty quickly.
bearish.
All right, so nobody's long. If you're long, give me a call. Nobody should be long. On the lows. Exactly. Exactly. Wait for the market to find its location. Again, there was some high volume around the 30-ish area, 25s, 30-ish, just noting some high previous volume areas. That's all, just some previous high volume areas. Remember, markets like to go back to high volume areas. Why? Acceptance, volume, where they can do a lot of business. No guarantee that higher areas are going to be responsive once reached, but that is an assumption that we can make. Boy, we just missed that D level, didn't we? Rat bastards. Did hit a penetration level though. Cycle day 2 penetration was a 1350s. Man, man, oh man. Could have been somebody. Do they window dress? They're probably pulling down the dress, pulling their pants down. Pull the curtains. This was a VWAP area around these 40s yesterday on the RTH session, so keep that in mind as well. Again, we're in this high volume area from yesterday, so uh, we'll anticipate this slowing down perhaps a little bit. Maybe finding some two-sided trade. All right. Oh, really? What happened there? We working that one. Oh, why did it not cancel? Hmm. Really?
Cycle.
All right. Oh, that's interesting.
Cycle.
Hmm. All right, again, notice in these, in this 30, 40-ish area, which was, it had some heavy volume, was starting to get a little bit of a slowdown of the push, right? Down into this area. So again, the expectation is to get a little bit more two-sided trade. Does that make sense, everybody? All right. Again, this is how when you start reading high volume nodes, high volume areas, right, you can at least make an inference that, this push down may begin to slow down into these areas. Okay, so let me give you a little bit of a, I'll give you a little snapshot of that. 1 second, what I'm talking about. I like to always follow up with visuals. Again, doesn't mean it's gonna definitively stop 100%, but so if you take a look at that screenshot there, okay, that's where the current price is, and you can see the overlapping where the high volume node or high volume area is. All right, so in that vicinity from yesterday, there was a lot of activity. So now prices return back to that activity. Now the question, we'll see if the market responds to this area more importantly. So what does this do for us? What it does for us is if we're managing a position, okay, we can then, to say you're short from above, you can say, okay, there's probably a likelihood that this area is going to be, get a little sticky, right? Two-sided type trade, sticky. So you know what? I'm going to tighten up my stop perhaps, or maybe take more profit if you have it in there, right?
Yes, premium turbo.
It's good. It's always good to know where those high volume areas are, but it's not just enough to be able to visualize them. What do you understand about them? What would you expect, with them?
Psychological.
Also, the price having pushed above the prior high yesterday, the market is out of balance. Think about the balance equation again. The market's really out of balance after a big move down and a big move up. It's really out of balance. It needs to find some semblance of balance, right, to kind of dampen out those high volatility moves.
Yes, 18 volatility. Yes, full stack.
First pullback.
Turbo high. Yes, full stack.
Oh, that's interesting.
Yes, full stack. Yes, full stack. Yes, full stack. Circle 5. Cycle. Yes, the snell turbo.
Woohoo! Volatility is high. Again, as I'm just making some comments here, again, regarding that high volume node area and what the expectation was for that. Again, that is not a prediction in any way, right? Oh, this is what it's going to do. It's just rather, again, references. So again, this is I'm just trying to help you kind of read, you know, and then you see what's happened here, right? The market came down to those 25-30s and then starts bouncing back up to near the 50s. And now it's kind of within that range, right? Just bouncing around within that range. So again, we can then begin to identify more, kind of validate that, okay, that high volume area from yesterday certainly is valid, right? So buyers, the expectation that buyers would come back into that area, it has unfolded. And so that helps validate, the read, not the prediction read, but just rather the read of the market um, responding from, particular areas.
Turbo cell.
All right. Let's see if we get a continued push higher here. We get an 810 now. Again, that's been wonky this week. Again,
Cycle island. Cycle high alert. Turbo cell. Cycle high alert. ES. ES.
All right, so we get our initial balance here in place. So down to those 30s, which we mentioned, and up to the 60s. So 30s, 60s.
psychological. cycle high alert. Purple high. Cycle low alert. Estes down turbo. Estes discount. PITBULL trader. PITBULL. Cycle high alert.
Well, we've exceeded that sandbox, but we're still on the edge of it, upper edge of it. All right, so prices bounce back up to VWAP area. We got our pretty much range established, so we'll see how far they want to take this. If they're gonna, maybe they rip it all the way back up to the highs today. Certainly possible, right? Right now, of course, we're on the long side. And again, you can see using those, the shifts in the moving averages, right? Shifts in that. And again, guys, I don't even have the ATRs on here, right? And I don't have the ATRs on here specifically, but to show you is, you when you just stay in alignment with the EMAs here, okay? I mean, look at it. All you have to do is get that 89 EMA, right? Get in alignment with that 89 EMA and just stay in alignment with that. This one here, most likely one of the components. I do have it on, I believe. Yeah, one of the probably one of the components in the ATA did not come back as true. They all have to be true.
Psychological.
Remember, you have filters, John, on the ATA. All right, so some of the filters, again, if the filters are enabled, then maybe one of the filters came back as false, and as such, if the filter comes back as false, all right, then it won't trigger. Well, if you're not on the right side of those EMAs, you are just getting roasted. Yeah, there's those 75s. It's our line in the sand today. tell you.
Psychological. Psychological. Yes, Yes, bull snapper. Cycle low.
Ah, damn it. The freaking My freaking connection went down again on Ninja. What a rat today. Jesus. How many times did I tell you I hate Ninja? Jesus. Fucking believe it. All right, like 75s now. Now my ninja's back up. Yeah. Well, it just all of a sudden it disconnects. You know, the CQG data feed, and all of a sudden just disconnects. Like, okay, we're just gonna disconnect you. Yeah, no, Sierra chart certainly much better. So I guess the new sandbox here will be 65s, 80s right now, I guess. Who's Peter Garcia? Take a look at that snapshot I just posted. You can see in that snapshot, right? So on the top part of the tail, All right, it was rejected from that upper area, all right, and then rotated all the way down to that lower volume node where we talked about the 30s, and then rejected back up all the way back up to the upper high volume node where we're sitting right now. It's a little clearer on that chart than the other ones I have. So you can see where it likes to go. Again, we talked about those high volume node areas. It likes to go there because that's where they can do the most business. So where does it go from here? Well, we probably have to clear those 80s to move higher, and then we'd have to probably ditch below 65s. So revised sandbox 65.80. Welcome to Friday.
Cycle low. Yes, 18 dollars. Yes,
Okay, let's rotate all the way back down.
cycle low.
Ay, ay, ay.
cycle line of first pullback cycle.
Yeah, we get those 60, 65s, 80s. That's the current sandbox. That's what it looks like here. Not doing much in this area. It's been fairly quiet. It's a quiet Friday. Anybody's rhythmic art trader keep going down, or is that me? It went down twice on me. Art trader's fine. Mine went down twice on me. Hmm, interesting. Okay. All right. Must be my router.
Yes, there's
No, I don't know what it is. It just closed on its own. It's not my router. I'm just joking. Oh, you can't execute a trade on the Pitbull prop account by a rhythmic? Okay, could be something with rhythmic. You know, my rhythmic went down twice.
below.
That's true. Telling you, take the day off. I'm telling you, take the day off. Gonna be one of those days. Is that serious? Are you kidding me? Amazing.
Cycle low.
All right, so going back down the other direction.